So welcome back to my channel. So today is Tuesday, and if you guys can see, the price was making higher highs and higher lows, right? Then price made a range over here. This was the range in which the market was moving around in Asian session and London session, and then all of a sudden in New York session at after 8:30, price went up and took the high of this range. So what will be the above of this high? What this candle will be called as a new beginner trader, like he will call it a hammer candle, or he will call this line as resistance, or he will mark this candle as a supply zone. Okay, so if he's marking this candle as a supply zone, where he'll place his sell limit, his sell limit will be at the starting of this candle, right? And his stop loss will be a little bit above of the structure, so like this. So you guys know that where the stop losses will be. The stop losses will be a little bit above of the structural high, right? Because they can see that price was falling down from this zone. So this zone is very important for the new beginner traders. So now as a smart money trader, you will start looking for trades and price will go above of this structural high over here. So now you know your bias. Your bias is bearish till the price goes and takes this low first. This will be your TP1, TP2, TP take, these two will be your take profit too, and this is your final take profit of a higher time frame. So now your short-term bias will be bearish from here, okay? And now as ICT silver bullet, you have to not trade whole day, like you have to wait for your ICT silver bullet time period. So now on 30-minute time frame, you got your short-term trend, and you know that where the market will go in for the short term. Now let's go into smaller time frames. Like if you go on 5-minute time frame, it's really choppy, so you will fall down on 3-minute time frame. On 3-minute time frame also is like, so let's go on 1-minute time frame. So yeah, it's clear over here. So on 1-minute time frame now, if you guys can see that this is the line, this is the resistance of the 30-minute time frame, and price went up and took the liquidity over here, okay? So this is a liquidity zone over here, and now you can see that you have to look for the trades from buy side liquidity, okay? You will not engage in sell side liquidity, or you will not take trade from the sell side liquidity. You will take the trade from the buy side liquidity, right? You will take a sell from buy side liquidity. Why? Because the short term trend on a higher time frame will be bearish for now till the price goes and takes this low, and goes and takes this Asian session low, and like previous day low from here, okay? So now you guys can see. Now let's see what the market was doing. Market was making higher highs or higher lows. So all of a sudden, not all of a sudden, it made a low over here, and then lower high, lower low, and then it made a higher high, higher low, another higher high. Now then all of a sudden it made a lower low over here, right? Not over here, lower low. Now this swing high was responsible for price to go and take the stop losses below of this structural low. And what's below of this structure? Sell side liquidity. But what I told you, the higher time frame narrative says its price will be falling on 30-minute time frame, because price has taken lots of like big liquidity pool on 30-minute time frame. So now where's the buy side liquidity? Buy side liquidity will be above of this structural high over here, okay? So over here you want to see price to go up and take the stop losses first from here, okay? Now what happens after that? Price goes up. Now there will be so many traders, those who will be taking this candle over here as a supply zone, okay? Or some of them will be doing the break and retest thing over here, and their stop losses will be above of this structural high or this structural high, okay? So now they will mark this as a supply zone, but what happens? Price goes up, takes the stop losses one more time, and now the sell side liquidity is inside. They're like inside in the market, okay? Not sell side, the buy side liquidity is now in. And now you can see the time zone. What's the time below? The 10 has started and it's like 10:11. We got a signal on 10:11 to take a sell from here, okay? Then what happens after that? Price fell down, took the low over here. So when price fell down and took the low over here, this high was responsible, right? And now this is our swing high. And if this is our swing high, you can see that there is this fair value gap over here. Price filled the fair value gap, and then it fell down for once again. Then it filled, and one more time it filled the fair value gap, then it fell down once again, and then it kept on falling. So now you can see over here, let's remove this. Either you could have placed your sell limits right over here, and your stop losses would have been this, like above this high, or above around psychological number like 1110. like this over here, and your target will be a first take profit, but first take profit will be this, and it will be 1:3 your first. Okay, now you can see over here, or if you want to go on the safe side and you want to look for confirmation, then what you can do is like you can just wait for like some sort of fair value gap to occur. Okay, now you can see that this high, this swing high was responsible for price to go down and take this low, right? So you can take the trade from this fair value gap over here. Okay, you can place your sell limit over here, and your high should, like your stop loss will be, should be over here, or you can put your stop loss above this high also. Okay, because we never know, price can go up and take this high and then it can start falling like the way it did over here, right? So now your first take profit will be like 1.5 RR, and then second take profit will be 1:3, close to 1:3, right? So like these are the two ways to enter in the market. So let's do a recap. Okay, so now this will be the recap. That first what we did, we saw on 30-minute time frame to know the short-term trend. So now we have to look for, first we have to wait for like ICT silver bullet, which starts from 10 o'clock to 11 o'clock. At that time we saw that price has taken the buy side liquidity from here, right? And this is the previous day high also. So what's above the previous day high? Buy side liquidity, right? So if it has taken the buy side liquidity, then price will be going to take the sell side liquidity after some time, right? So now our short-term bias will be bearish. So from now we know the short-term bias is bearish. So what we do if our short-term bias is bearish, we will take sell from the buy side liquidity. So now we'll go on smaller time frame and then we'll look for buy side liquidity over here. And now you can see that there is the buy side liquidity right over here. Okay, first there was like this choppiness because it was 9:30, I guess. Yes, like this is the 9:30 candle. From 9:30 to 10 o'clock, as I told you guys, that at this time period there are the lots of stop losses which are taken. Okay, like over this time period people lose lots of their money. The main move starts from 10 o'clock, ICT silver bullet. Okay, so now what happens, it takes the buy side liquidity. Either my entry pattern will be that I will place my sell limit over here and a stop loss over here, and my take profit also over here, and I will forget about it. Okay, that's the one way. Another way is to look for confirmation. If you're a new beginner or like in smart money concepts and you want to see something good, like something good for to risk your money, so then you will wait for a good break of structure, oh sorry, the change of character and a fair value gap. And over here you can see that it gave it good break, and you can see the candle left the imbalance or like fair value gap over here. Then you can take the sell from this fair value gap. Okay, and your stop loss can be above this high, not this high. Okay, because price can go up like the way it did over here, or you can place the stop loss over here, and then you can enter in the market from here. And then you can see how simple it is. And in afternoon session it did all lots of consolidation. So like because price has reached the high time frame sell side liquidity over here, as you guys can see that it went below of previous day low also. So today it took the previous day high and then it went down and took the previous day low also. Okay, so this is a reversal candle. Whenever, if you have seen my daily bias video, okay, for example, like if you have seen that my daily bias video, right, the video in which I taught that how to look for daily bias, whenever we see this type of candle which takes the low also of the previous day and the high also the previous day, then it means that market is about to reverse. Okay, either it will reverse or it will keep on continuing going up, but I think so that market will reverse from here. First it will go for this low, and then it will go for this low right down over here, and then, or this will be the final. Okay, but this is how you should, so like this is how you will do. You will find out the bias, short-term bias from 30-minute time frame, and then you will execute your trades on 1-minute time frame. So yeah, I hope you guys like this short and quick video, and if you guys like this video, drop a like, share with your friends, and subscribe for more content like this. And if you have any questions, just DM me or write down in the comment section. I will make the next video on it. So until next time, bye.